Hi there, I'm Charles Goddard, as I have been for many years. I'd like to welcome you to this brief video concerning why I wrote this book. And it's quite simple, really. It seemed to be the best way of leveraging time. I'm on a bit of a mission to show people, prove to people, teach people that they can do more of their own investing and trading for themselves. It's not this big mysterious world that it's made out to be, and made out to be on purpose to stop you or discourage you from doing things for yourself. So I'm going to just run through a couple things, why you're here and why I'm doing this, and hopefully it'll kindle some interest in you in learning more for yourself, that it's not an impossible task. But first, let's have a few more words about me. Well, there's that handsome devil on the screen now. In the interest of full disclosure, that picture's probably 10 years old. Don't want to scare you with an up-to-date one, but there's my designations. I was in the financial industry for a little over 20 years, and I was in it at a very high level. And those designations are all uh, investment designations. And got a little disillusioned with the industry itself, but I don't want to go off on that just yet. I will in a little bit. But mainly, I wanted to um, show you that with all those designations, it still came down to learning things from some people that plied their trade in the famed commodity pits of Chicago about the practical aspect of investing and trading just as much. It's just as important as the book learning, and so you don't need all of this stuff. I needed all this stuff, but you don't need all this stuff to get going with your own account. And my book proves it to you, and will demonstrate to you how you can handle your account to good effect for yourself and be in control yourself. And you just have to have some confidence that you can just listen to yourself and not anyone else. Okay, so here we have a chart of Apple, a well-known stock that trends very nicely both up and down. And there's no reason why you shouldn't stay with stocks in the S&P 500. And I'll show you techniques in the book that will you can take advantage of those trends and get as much out of it as you can. If you were to risk everything on a stupid penny stock or something else, flavor of the month, just nice solid stocks traded properly, and you can do very nicely with them. So this is just to demonstrate that you, looking at this chart, you too can see where the buys and the get outs are. And I'm not going to try and explain everything to you, but I think if I show you the basics, you'll agree with me that you can see what I'm talking about. So here we have a downtrend, which is essentially lower lows and lower highs. And we talk about that and how you recognize that. And then we start to get an upswing. The question is, where are we buying in? So what we're looking for now is we're looking for a level to the left of us that would be considered resistance. So what that means is, and again, you're going to learn all this, resistance is simply a place where there's a chance that the price bumps into that level and heads back down again. Once it goes through that level, chances are the trend is continuing. So here we have the point where we would buy. Now, we always protect ourselves with stop losses. We don't believe in taking huge losses on any trade. If you follow this process of letting your winners run and getting out of your losers quickly, statistically you can be wrong more than 60% of the time, 60% of the time wrong, and still make a very nice profit. And that's what the industry doesn't want you to know. That is the bit that they mislead you with the statistics. And I'm telling you, this is the way it is. And I prove it to you in the book with a trading exercise that took place over a year. I did it on a blog, so it was day to day. There's no, this happened and that happened, and I could have done this. No, it's exactly what happened as it went, and you will see that. So we need to protect ourselves, and we're going to put our protection here. Why? Because that is support, something you will learn about, support and resistance, two basic, very key things. If the price goes below a support level, there's a risk that the trend is not taking place, or it is stopped. So we want to buy here, and we want to protect ourselves here. Now the question then is, well, when do we get out? And that's the toughest part for most people, is getting out. Now we've got a couple of options. As the price advances on this trend, we can bring our stop closer. So here's a support level we can identify here. So once the price goes above that support level, breaks resistance again, we can move our stop up here to this level. So what does that mean? It means we've got some profit in our pocket, and we are protected if the price goes below that level. Now the price goes on up to here, creates a high. Now I teach you that if there's a new high in the price unmatched by a new high in the energy that drives the price, then we need to pay attention to that. I show you how that's done. And then so when this trend line that we created, when that happened, is broken, we're out. So this is starting to look like a dog's breakfast, but I think you can see everything I'm telling you. It's not rocket science. You can do this. So that's just a very basic look at how you can trade Apple. And what you'll find with Apple and with other strong companies is that the trends, you can build on your trades. So in other words, once the price is moved up enough from this buy, goes on up, and now you can put in your stop at this position so that your trade is profitable and protected. You can now put in another buy above this level, so if the trend does continue on up, you've got two positions. One's profitable and protected, the other one is just starting, but you've got your stop loss in a sensible position. Now in this case it doesn't happen, it falls back and we're out. But that is the nature of trading. You don't, there will be more trades, you just get out when the market tells you to get out, when your process tells you to get out. Okay, I've probably gone on longer than I wanted to on this, but it's important you understand that it's not that complex, and with few processes, few rules, and I'm talking two main ones really, you can master this. Okay, let's look at the reasons for this book in a logical sequence. Okay, so the number one reason was to teach you some of the basics of technical analysis. Technical analysis is mostly stock charts, and why are we using technical analysis instead of say fundamental analysis? Well, I want pure information, and the chart is the only way I'm going to get it. I go through this in detail with you in the book. Why technical analysis? You can still do whatever you want. There's still tons of things in the book that will benefit you, but this is something where you can take a look at a chart anywhere in the world at any time, and you can apply your particular process to it and decide whether you should buy it. The next thing is a really I'm a little agitated about the type of rhetoric that comes out of the financial industry about whether you can do this for yourself or not. They continue to talk about the buy and hold, and they'll give you statistics of the S&P that it's for the last 100 years it's done whatever, and that is really misleading stuff. You can go 15, 20 years and not make a penny on a buy and hold in the S&P. Example, if you had purchased a stock at the high of 2000, so we're not talking ancient history here, we're talking at 2000, you would not have made another penny until 2013. So there you needed to have gotten out, not, and then perhaps gone to the short side or found things that were going up, because as the markets circle, some things are in favor, some things are out of favor. So once you know what to look for, you can then trade in and out of other stocks no matter what's going on. But buy and hold is not the way to do it. But it is the way to do it if you're the financial industry and they want to keep you in place, keep those management fees coming in no matter what goes in the market. Don't really care whether you win or lose. They want you to stay in place, and so they're willing to say anything to keep you there. Don't listen to them. Just learn things for yourself and do it for yourself. All right, now, so then having gone through all those designations, I've sorted through all the wheat, and I think I've got the essence of it for you in this book. You can go through this book, and this book will be good for you indefinitely. Or there is a list of seminal books in the back. You can, if you want to make a study of this or you want to go deeper, you can do so. And but in the meantime, this book is all you need. You can get going with this book, and it's your little Bible, so to speak, that you can use at all times, and you will find that you can manage some or all of your own money to much better effect than the voice activated financial advisor you have currently, especially if it's one of those yahoos from the bank trying to tell you how the markets are working and how this. Do not listen. Just do it for yourself. Anyway, that's pretty much it from me. I'd like you to, if you've got any questions or comments about what you've just heard, I've got my email address there. I've got a landing page that goes through some of the pro things that I've just talked about, and we'll talk to you a bit about different things that the pro traders look at, and you're like, what? They don't place trades at lunchtime? Why is that? Well, you can find out if you go to that web page that's showing at the bottom. You may have to, I don't know if you can cut and paste. I don't think the link is live, but just do whatever you have to get to it. And in the meantime, I would like to thank you very much for your time, and I hope our paths cross in the near future. Take care of yourselves. Bye now.